I like the Columbia Care name. I do like the cannabis better, but one of the
Yeah.
knocks on Twitter was Columbia Care kind of sounds like pharma.
Hey everyone, welcome to our latest TDR Cannabis exclusive. Hope you had a great week. This is Shad Dales, your host, along with our usual Anthony Verrill. Big news this week, obviously the Benzinga Conference. There's a vote coming up with safe banking. And as well, we want to talk to the best thought leaders in this space, including a stock that's been up 300% this month alone, as we welcome in the CEO, not a new company, but a new name, the Cannabist Holdings Company, formerly known as Columbia Care, which trades on the OTC under the ticker symbol CCHWF. Nicholas Vita, good to see you, sir. And thanks for joining us for the first time on the podcast.
Thanks very much. Great to be here.
Yes. What do you think of all this news circulating the industry? I like to start things off with new people on the show, but this is great positive sentiment in the space, finally, because we've been beat up so much. And I think that's putting it mildly. So I don't want to talk about anything controversial, anything downfall as far as the industry is concerned. It's just positive momentum, and let's ride that wave, right?
Yeah, I think that we're seeing something that we've never seen before, which is real action out of the executive branch of the federal government to change the way cannabis is treated. Set aside all the positive movements you're seeing in places like New York, New Jersey, Virginia. There's a laundry list of very, very exciting markets, but the big picture has changed fundamentally from my perspective.
Yeah. Anthony, I know you're going to agree with that, just in some of the sentiment that we've had in the last couple of days. Nice little conversation we have with Don Murphy, but a great opportunity for companies like I said, formerly Columbia Care, the Cannabist Holdings Company.
Yeah, I mean it is, and I mean you look at their map in their latest investor presentation, and I mean you guys almost have a stranglehold on the Northeast, with the exception of Maine. You're in some powerhouse markets. I mean, is that the core focus of a lot of the growth that you're anticipating from the business? Or you're also looking towards like the southern states, Florida, Georgia, Texas, and those jurisdictions coming online?
I think over the near term, the Northeast is really the place for us to be. That's where we have all of our scale. That's where we've invested all of our CapEx. So we really don't have any more investment to make there. At this point, it's just a question of capitalizing on the markets that are turning from either nothing to medical and from medical to adult use. Yeah. And those generally offer the best opportunity to create real sort of financial gains.
Yeah. Focus on your strengths, right?
Yep.
So what's your take?
So want to begin.
I mean, I kind of was curious. So what's your take on New York? I mean, do you think that this is now light at the end of the tunnel with the when they get to the application process that they're going to open up for the current license holders? I think here and going into mid-October.
Look, I think New York has learned a lot of lessons the hard way, and so have the people who've operated in New York. But one of the things that you guys said at the beginning of this podcast was we're seeing real movement, and in New York, we're seeing real movement. Yeah. We're seeing them start to enforce their own regulations. We're seeing a sort of a deadline that's been set up to allow the original operators to come in and actually help add some scale and infrastructure to the marketplace. Whether people like it or not, it's the second largest cannabis market possibly in the world, definitely in the United States, and so you can't ignore it. And when New York does, the great part about New York is that after it sort of figures out what it wants to be when it grows up, it always commits to it.
Yeah.
And so what we're seeing now is legislative and executive branch committing to a program that's inclusive, that really takes advantage of the opportunity from a financial perspective and from a market perspective.
Does New York, a lot of investors, like you said, say the same thing. Huge market. Do they get this right? This is a big step in the right direction with the announcement, but that's the big question. Will this state eventually get it right?
Eventually they will. And I think they've taken some really important steps to get there. Most important, I think the governor's finally focused on it. Right, this is a massive, massive opportunity for New York to plug a giant revenue gap that it needs to fill. And it's a market, walk around the streets of New York, walk around any major metropolitan area in New York State. Cannabis is everywhere. It's a big existing market. So all we have to do is transition people into a market where they know they're not getting any sort of toxins or polluted chemicals in their products, and they're getting regulated, tax-paying, access.
Do you find right now the conversations that we're having, I'm finding, is like out of Washington, and then when you're speaking and referencing to like governors in specific states, this seems to be just the overall topic of cannabis, a major priority. Do you find that? And if so, what do you think has changed?
Well, I think it's an incredibly popular issue amongst people broadly. And so, it's something that touches most people's lives in one way, shape, or another. If not on a consistent basis, at least at one point during their life. And so everyone is aware of it. The second thing is, there are a lot of programs that need to be funded. The economy hasn't been that strong. There have been some headwinds that everyone's been facing together. This is one of the easiest ways for a state or municipality to really begin to recapture some of that revenue and funnel it back into the system that needs investment.
100%.
So I think it's low hanging fruit. When you look at the panoply of options, this makes sense because it's good policy, it's good community management, and frankly, it's very good tax and regulation strategy.
Yeah. So let's begin off the top. Most importantly, you changed the name from Columbia Care, as I said off the top, to the Cannabist Holdings Company. Why the change?
Well, for those of you who know us, who know us, know that we're a fairly methodical organization. We've been working on this for a long time. I think it was the spring of 2021 that we actually launched our first Cannabist retail location. And so we've been going out there into the marketplace, learning and listening to what our team says, listening to what our community says, listening to what our consumers say, listening to what our regulators say. And, it really resonated. It resonated in every single constituency that we answer to. And so it was a natural progress for us to decide that we were going to convert to cannabis. Now, obviously, there was a bit of a hiatus there because there was a transaction that didn't go through with another player in the space. But as soon as that was done, we came out, I think, very strongly in favor of moving forward with the conversion into the Cannabist name and branding. And by the way, it's not just about putting paint on the wall. It's not just about a new name. It's about the way we set up our facilities. It's about the way we future-proof our organizations and our asset base. It's the way we train people, the way we sort of engage with the community and how people think about us. Okay. And so it's an entirely different operating model that, frankly, is really reliant on technology and a lot of the fundamentals that we think are critical in order to run a successful business in this space.
So changes obviously within the company name. I also wanted to talk about some news that you had early last week involving your subscription agreements with institutional investors for the purchase and sale of 22.24 million units of the company at a price of $1.52 per unit Canadian, with the optionality for investors to purchase a similar amount of units for the same price at any time up to 45 days following the date hereof. So all told, around $25 million up front, with an additional $25 million potentially on the backside of the arrangement. Why did it make sense to raise money now?
Well, we've seen an increase in our stock price of 300%,
right,
in the past month. We have a significant amount of momentum in our business that we wanted to take advantage of. One of the biggest obstacles, one of the things that keeps me up at night, is leverage. Everyone loves debt until they don't. Yeah. It's something that you can plan ahead for. And we had an opportunity with one investor that's been a long-term institutional investor of Columbia Care, a big supporter of ours, came to us and said, we'd like to get more exposure out of your debt and into your equity. And so, how many times do you get to answer that call when you're in the cannabis industry?
Yeah.
Enough. And they came in with size. And by the way, it's not just the sort of the original 25 million of infusion with the green shoe of another 25. They also did a debt for equity swap. So in one decision, we basically brought in a very large institutional investor that wants to support the company. We delevered by $50 million, potentially 75. We took away the next sort of maturity date is paid off. And so we really don't have to worry about anything in the balance sheet other than where do we deploy our resources to maximize growth.
I didn't realize it.
And so this was about de-risking, and it was really about making sure we can drive value back into the shareholder hands, away from the equity, away from the debt holders.
Yeah, my next question was literally going to be, what would you say to retail, or what would you say to investors that are worried about the leverage on current companies' balance sheets? But I mean, you literally just knocked it out of the park. I mean, it's impressive that you were able to get the investor to go from debt to equity in size, and then take out that maturity date. So now you can basically just, I guess, deploy the capital as you see fit throughout the organization, without having to service the debt on a go-forward basis.
What's exciting is that all those dollars we're saving from an interest expense perspective go right to the bottom line. Oh, yeah. And because we have such a huge retail footprint, we get hit harder by 280E than anyone else. So rescheduling eliminates that. And so this is a real opportunity for us to start driving value out of the free cash flow of the business.
What's your take on Florida? Do you think the adult use conversion is a coin flip like most? I mean, I know that I'm pretty in tune with it. I mean, I'd love to see this market flip adult use. It's part of my investment thesis in a lot of companies. And I mean, a lot of people are like, well, DeSantis is anti-cannabis. And I'm like, no, he's not. He brought smokable flower. The market has flourished under his guidance. And I mean, a lot of CEOs that I've talked to really do think it's like a 50-50 flip.
Look, I think it's a 50-50 flip, and I wish I had some magical insight, but I do agree with you. I think DeSantis is pro-business, and ultimately that's what he's focused on. It's less of an issue for him and more about just driving the Florida economy. If it happens, it's great. But guess what? If it doesn't happen, it's still great because Florida is one of the it's the second largest state in the country, and it has the most favorable business environment of any of the large states in the United States, other than Texas. So I mean, I think it's one of those situations where it's heads. It's a great coin flip because it's heads you win, tails you win.
Yeah. Your retail footprint, what's the size of it right now? And how do you, I guess, what's the growth strategy if we do get some reform involved?
So it's funny. Our retail's footprint is different than a lot of people's. We're under indexed to Florida. We're under indexed to Illinois. So we're in a lot of states where people have smaller footprints, Virginia, New Jersey, a lot of limited license markets. And we actually have several dispensaries that we still have to build out in places like Virginia, Maryland, New Jersey. And so there's an organic element to the growth strategy from a retail side. We have about 86 dispensaries right now. But what it's done is it's positioned us for a very interesting set of conversations because that becomes one of the most important conversation pieces as we build institutional relationships on the wholesale supply side.
Gotcha.
And so as we think about trying to build strategic trade partner relationships, we can do that much more effectively, knowing that we can give people access to markets that are limited license in nature, that are sort of more competitive to get into, but they have better pricing dynamics, more stability, more regulation, all of which is very good for a regulated industry. But our strategy long term, look, I think that there are two components to it. Number one, we're going to convert everything to the Cannabist over the next 24 months.
Yep.
And by the way, that's been a very, very efficient way. So a lot of people were calling us up and asking us about, this transition from Columbia Care to the Cannabist Company. That cost us about $50,000. It's like we have the skill and the team internally to be able to manage this in a very efficient way. And when you extrapolate that over to the conversion of an existing facility, Columbia Care facility, to Cannabis, not only does that, I think, really change the way we're positioned in the market, it also changes the way, sort of we're seen as a wholesale provider. So there's a retail and a wholesale component to it that involves a lot of branding. It involves a lot of products that are being rolled out. It involves a lot of connectivity and a lot of leveraging of technology, some of which hasn't yet been announced. And so it's coming down the road, but it's all very exciting. And I think that what you'll find is that, we've been very quiet for the past year and a half.
Yeah.
But we haven't been quiet internally. We haven't been sitting still. We've been preparing for the future. And that future is starting to come now, which is why we were able to take advantage of the market upturn from a balance sheet perspective, which is why we, you talk about getting lucky. HHS came out and told us that they're trying to reschedule the 3. And a week later, we basically announced we're changing over to the Cannabist Company, which I think has a lot more resonance for a retail investor and an institutional investor.
Why is that?
Because it's unapologetic, right? I use this in a meeting once, but it's like onomatopoeia, right? We are what we sound like. It is exactly what you think it is.
I like the Columbia Care name. I do like the Cannabist better, but one of the knocks on Twitter was Columbia Care kind of sounds like pharma. To an extent.
Yeah.
So I do think it is very serendipitous, and it was an awesome move going to the Cannabis, almost compounding it with the HHS, because it's like you're positioning the company for rapid growth, especially legalization coming down the pike sooner or later. So, I mean, yes, the timing was dead on.
We should put that as a testimony on the website.
It's all over Twitter. I mean, Columbia Care, you guys get tons of chatter on Twitter, and that was one of the things around the name change. It was like, this is awesome. Because the one knock was it did sound a little farmy, and at the end of the day, I mean, I look at the markets that you're in from a interest perspective, and I mean, it's undeniable the growth that potentially is there with the markets that you guys are sitting in today.
Thanks.
What would you say, Nicholas? Conversations, you brought up institutional interests earlier. Some of the conversations I've had, if we do get, it's already here now, but if we see reform, safe banking were to pass, let's say, sometime the next, I don't know, I'm not going to even say a timeline, but, I've never seen so much positive sentiment out of Washington right now as what Don Murphy, the lobbyist that we had under Twitter Spaces, referenced to last week. But right now, it's all about providing shareholder value and having the right team in place to generate interest from institutional investors. What's the number one thing that you're hearing based on conversations that you have? Because this is going to move quick if, like I said, we start to get some movement from Washington.
Obviously everybody's very excited about the rescheduling.
Yeah.
That's the most meaningful thing that can happen to the industry is the elimination of this additional tax that we pay. That goes away. My tax burden goes in half. overnight. And it has a profound impact on our free cash flow. From a policy perspective, the legislative piece, the SAFE Act, and accessing the capital markets, right, that's a game changer, because it could potentially solve for not just accessing the markets, but also all the custody issues, a lot of the other access issues that investors have struggled with. And so, I think that, look, I this is going to sound overly self-promotional, but the fact is that, like, knowing that you have an A or a B, and if one of them works, you're in pretty good shape. And C is status quo.
Yeah.
I feel like, that positive sentiment is really hard to kind of undermine. I mean, it just doesn't make sense. If anyone was ever going to look at a market that's trading, that's trading the way we are trading, and I say that we as an industry at large, like, now is the time to kind of get ahead of that, because what the implications of what a move to Schedule 3 means are so far reaching. I don't even know if people have calculated it. And by the way, it also means that we're accessible. Like, companies, real corporate entities, can then begin to think about the industry, but it's still going to be state managed. So you have this really interesting dynamic where there's a competitive dynamic that will almost keep people out unless they could find the right partners, which is why a national footprint is so meaningful from a strategic perspective.
Speaking of
100%.
partners, what's your take on alcohol? Looking at the space and coming in, because I think Tilray and Canopy get blasted for wanting to kind of have the foresight to deploy the alcohol model in a market like the United States. I think it's, from a vision perspective, it's advantageous to be going down that model, as I do believe alcohol will look, or cannabis will look like alcohol on a go forward basis. So, I mean, what's your take on that? And have you spoken to any alcohol companies potentially that are interested in the space?
We have, and I think the big difference is that we're a 2-tier system versus a 3-tier system, and that changes the economic model a lot.
Yeah.
It also changes the way people think about the sort of the division of manufacturing and distribution. There is an absolute synergy between consumers of alcohol and consumers of cannabis, especially on the adult use side. But there's also a significant synergy with specialty pharma, and so there's a whole range of applications that you can sort of point to. In our case, we've spoken to healthcare companies, we've spoken to alcohol companies, we've done all the above. And I think everybody's waiting for the right moment. The difference between what, say, we're doing and what a Tilray did, or what a Canopy did, is we're starting off in the world's largest market.
Yeah.
So rather than starting off in Canada as a cannabis player, which was a great idea when it began, right? I think what they're finding is that they're sort of hitting up against a bit of a ceiling right now, because the market isn't as large as the US.
100%. Yeah.
And so what we've done is we've focused on really trying to be cannabis only. When the partnership opportunities come, they're not like, the alcohol companies aren't going to want to talk to somebody about their core business. They're going to want to talk to somebody about an expansion opportunity, in my opinion. So I'm not saying it's good or bad. I'm just saying our strategic vision is do what we do as best as we can in the markets that matter, set up real footprints in markets with scale, and give yourselves a competitive advantage that's sustainable, that a strategic player would want access to. And by the way, a strategic player may want more than one partner.
Yeah.
So, for us, like, we don't have enough bandwidth. There's so much going on in cannabis right now. I can't even imagine layering on top of that alcohol because of the differences in the business models. But for us, making sure we get New York right, making sure we get New Jersey right, making sure we get Virginia right. I mean, these are the priorities for us, and I think they're going to keep us busy for the foreseeable future, because each one of those has the ability to turn into like a transformational impact on our business. Right?
Yeah.
I mean, we're just over $500 million top line, but the fact of the matter is, New York is a multi-billion-dollar market.
Yeah.
Ohio, as they start issuing more dispensary licenses that are not fully vertically integrated, New Jersey's doing the same thing. I mean, Virginia is basically the same size as Illinois, but they're 4 operators. Yeah. And we have 2 of those licenses. So it's a really, really kind of important moment for us to make sure we have absolutely no foot faults with the regulators. We do the best thing we can for our people, for our communities, for our consumers, and we show a real sense of an appreciation for innovation, both on the engagement side through technology and on the product side.
4 operators in the state of Virginia.
Yeah, and we're 2 of them.
You have
those
2
markets,
of them.
PA, Ohio, Virginia. They're lucrative markets.
PA is a wonderful market. I mean, it really is, and we've got a massive, fully built out facility in Central PA that's ready to go when and if adult use hits. So, like, all of these sort of options are sitting there in front of us. I think the real trick for us is to make sure we spend money in the right place in the right order. And we don't get ahead of our skis. And for me, it's always about sort of not letting our eyes get bigger than our stomach.
That's something that I think a lot of CEOs are preaching now, but didn't necessarily do in the early days. But it's great to obviously see that you focus on your strengths and stick to that, right?
Yep. Yeah. And by the way, it's a lot more fun that way.
Yeah.
Because
Isn't it?
you don't feel like you're about to fall off a cliff, right? I mean, it's just
Nicholas, we're like, hey, you guys, you want to follow cannabis, psychedelics, crypto, AI, longevity, tech, all this stuff. And I'm like, yeah, it sounds fucking great,
Yeah.
but no, we can't do it. We're only so big. Focus on one thing really
to
well.
what we know. Yeah.
Focus on your strengths. That way we get to meet people like you, right? Anyway, sometimes they say the best move made is no move at all. And when I look at this Cresco deal, whatever you want to call it, unsuccessful merger, whatever. But ironically, both companies are actually doing much better in recent times because of it. We actually spoke to Charlie 2 weeks ago, and didn't work out. Are they still looking at possible merger agreements in the future? Could be if the right opportunity comes its way. But what's your take? Is sometimes the best deal no deal made at all?
I think so. And in this case, look, the strategy still makes sense. This is an industry that needs to have consolidation and rationalization. And so where we really ran into an obstacle was on the regulatory side, just trying to get the thing closed. And it went on as long as it should have.
Yeah.
And then we decided to part ways. But look, we were always supposed to be the growth engine. We were always supposed to be the one that sort of took the platform into that next level. And we've obviously retained all of our assets. So we feel very good about where we are today. But if we were to go through that process with anyone else, I'm not sure if it would have ended up quite as positively as it did. So I'm glad we had that experience. We certainly learned some things from Cresco. I like to think they learned some things from us too. And we see them in all of our markets. So it's not like we'll ever sort of avoid one another. But the fact is that the thesis behind the strategy will make sense. I mean, we're not looking for anything strategic right now. We've got enough on our plate, and we really want to focus on the growth markets that we're in. But you never want to say never, and you always want to be open and opportunistic. I think the real question is, how quickly do we do when the process of completing this deleveraging is done?
Yeah.
And we've made sure that we position our equity holders for the biggest pop possible. Look, we're going to slowly start creeping back into that growth mindset where we're looking at acquisitions, but it's going to be very tactical, and it's going to be in markets where we want to build scale. And I don't think we need to do something that's broad based in order to really begin to capture additional market share quickly and additional profitability quickly.
And then
Without
Go ahead.
Go ahead.
I was going to say, what's your take on your West Coast markets? I mean, I know that you guys have a huge footprint in Colorado. I mean, are those kind of just in almost autopilot? They're just they're there, and it is because I mean, I was in Colorado. Actually, I got back yesterday, and I walked into a dispensary. I'm not going to name names, but an ounce was $108. Of their premium top shelf flower. I was like floored considering what the prices are in Florida. So I mean, are those markets you think you guys just stay in and just let them keep doing what they're doing?
So I'll tell you what's really interesting. So what you just saw in Colorado is what we've been living with for the past several years, and I think that's had a huge impact on the way we think about our business. Right, price headwinds, price compression is coming. Yep. You're going to see the markets become more and more efficient, and so that experience I think makes us very well prepared for what is happening in Pennsylvania, or what is happening in a state like either Illinois or Florida. And so when we think about the sort of the future of cannabis, for us, we learned some tough lessons in Colorado, but now we're capturing market share. We're expanding our footprint. We've rationalized our business, made it much more efficient. We'll go through a cannabis conversion from the green solution, but more importantly, we're doing it all profitably. And so, like that sort of understanding how the markets actually mature and having that exposure has been ridiculously important for our ops teams to really take those lessons learned and apply them elsewhere. I mean, we've seen a lot of that in California as well, but California is a very different market than Colorado. Look, I mean, I think if every market ended up like Colorado, we'd be in good shape because we kind of know what it takes to be profitable in a market like that. And by the way, what's super interesting about Colorado is that you don't have any large MSOs there. We're really the only one. Yeah. So for the first time in the history of our company, we now start seeing some consolidation occur. that's allowing us to have real institutional relationships, right? This concept of an enterprise or a strategic partnership on the wholesale side is meaningful on the whole, for a big part of our business. And so now we're starting to sort of start to see how the markets mature. We're taking advantage of that in an intelligent way, and we're doing it in a collaborative fashion. So we're actually finding partners, and we're working with them as closely as we possibly can. So think about it, Colorado is a $1.8 billion market.
Yeah,
it's massive,
yeah,
right? It's a massive market.
That's huge.
Yeah, huge, and it's the most fragmented market in the U.S. Yeah. So now think about the way large operators could go in and actually consolidate that market. Now, it hasn't always been perfect, smooth sailing, but where we are today is in a very good spot. And I think that, we've made the necessary changes. Remember, we just took out $38 million of costs, of operating expenses over the past sort of 6 months. And so all those cost reductions are permanent. And that has changed the way we fundamentally do business in a lot of these markets. It allows us to be much more profitable.
What excites you the most about this industry the next 6 months?
I mean, I'd love to say New York, but I think that's probably something people will just laugh me out of the room and say, show me when you got it. But I think being part of this like the next phase of the evolution of the industry.
Yeah, I think you'll start to see momentum build quick in New York when you start to see, wow, safe banking did pass. There was rescheduling, and you start to actually see action starting to happen. I think people are going to get pretty excited about that.
Yeah. I mean, look, for us, I think one of the most exciting things is that with the technology suite and with a new rebrand and what that means for our retail and wholesale operations, I've been so lucky. Like, I was the first employee at Columbia Care. I've been
really?
Yeah, I've been there since the beginning, and there was a lot of blood, sweat, and tears, a lot of mistakes made over the years that we've learned through and we've powered through. And the fact is that, like, I get to see Columbia Care become the Cannabist Company. I get to see a one-person, one-man band become like a 3,000, 4,000 person organization. And we're about to go through one of the biggest transformations at the federal level in history, and we had a hand in that.
Yeah.
And so all the things we've been doing behind the scenes, like for the communities we serve, for the patients we serve, for our teammates, a lot of this stuff that you're hearing about now is not just for corporate purposes. It's really to kind of respond to many of the things that we've learned over many, many years, and that's, for me, that's a very humbling place to be.
That's pretty cool.
Yeah,
you're the first employee, and then you stop, pause, turn around, and there's 3,000 to 4,000 faces looking at you. Yeah. What's that mean to you?
It means that there's an inverted triangle. So every time somebody suffers, every time somebody's upset, whether it's a single patient and I get an email from somebody randomly, or if it's an employee, right? You hate to see anything but perfection. And so for me, it's a constant state of pushing forward with the strategy, but never forgetting our roots.
Yeah. Nicholas Vita, living the American dream. That's a great story. First employee, and now you're up to that many. That's incredible. Yeah. You always want to sit down with people and just figure out, like, what's the journey? Tell me the story. Because, like, how often do you run into somebody that can actually start a company and scale up to that many employees? It's the journey that matters the most, right?
Yeah, I will tell you, like, and if sometime we should sit down, because I think about the stories of the old days and how much has changed. I mean, I don't think people realize how much has changed since 2012. It's really remarkable, and I still see some familiar faces, and which is always nice. But, like, the industry it's becoming a real industry. Like, it's amazing to see how, like, but the big joke I always tell people is that I knew I had done something right when it became very clear that if I got hit by a bus tomorrow, like, the organism will continue, the entity will continue, and that to me is something I'm very proud of.
I always use this as an example as to how far the industry's come along. Do you know Tyler Burline?
I know the name, yeah.
So he's at Safe Harbor, formerly from I forget the previous company he was at, Hyper. So I think it was around 2012, the first MJ Biz conference, small little conference room. I forget what hotel you had told me that, but everybody was standing next to, like, exit doors.
Yeah.
As if, like, the police came in, they're going to dart out the doors.
Oh, Cannabis conferences look very different now. I mean, I started investing in the space in 2015. So, I mean, it's coming on 8 years now, and it's drastically changed.
But now you start seeing those patterns. You start seeing the cycle. Right? It's amazing.
Yeah.
God, that's awesome.
Speaking of conferences, you in Chicago this week for Benzinga?
Absolutely.
Nice. Look forward to seeing you. We get caught up more, but yeah, this is incredible. Best of luck. Like the name change, and congrats, obviously, on the stock performance over the past month, and more importantly, a lot of excitement building in this industry. So please keep in touch, and look forward to seeing you in Chicago.
Thanks very much. Look forward to it, guys.
Thank you for your
Take
time.
care.
All right. Thanks, Nicholas.
Thank you.
So what'd you all think of the interview? Did you like what we recorded with our guests? Then leave a comment below and let us know what you thought of it. And if there's any more questions you want us to ask, as usual, share this video with your network, click on that bell for all notifications, and most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.